Welcome to episode 3 of the Strong Money Podcast. It's Mitch and Jacob here, and we're going to be talking through today, just addressing all of the anti-Bitcoin arguments. All of the maybe valid arguments, completely invalid arguments. The Bitcoin myths, I would say, that get thrown around, by normies or maybe even by the media or wherever else you may hear Bitcoin talked about. So I think this is going to be fun. One, just to help, like we were saying before we hit record, haven't thought about it in a while, or you and I have never even had specific conversations on these, to hear what the other person has thought. So this will be brand new really for both of us, but excited to dive in. And this is a conglomeration of anti-Bitcoin arguments that I've heard. Twitter, I've seen people. I had a graph somebody tweeted the other day that was kind of like a flow chart of all the arguments against Bitcoin, and had them all laid out there. So eventually we'll address all of those. We won't today, but I think it'll be fun just to chat about this.
For sure. Ready to get rolling.
Awesome. All right, so first one. I think I probably hear this one, honestly, maybe more than most of the others. But first one, Bitcoin is a Ponzi scheme. You want to address that first, or you want me to?
Go for it. You said you're the one that's already got all your ideas around it, so you got it.
Yeah, I mean, I wouldn't say that I pondered this for hours or anything, but I by definition, a Ponzi scheme, for those that maybe don't know, and I think people who call Bitcoin a Ponzi scheme really don't even know what a Ponzi scheme is, or they wouldn't call Bitcoin that. So by definition, a Ponzi scheme is, robbing Peter to pay Paul, essentially, and skimming some off the top. If I was the one that was promoting this Ponzi scheme. So but yeah, by definition, there's really nothing of value being exchanged by anybody. It's simply taking money from someone else and giving it to another person and taking some for myself. But there's really nothing of value that is done in the process of redistributing that money from one person to the other. And I would also say that, a Ponzi scheme, there's usually like a guarantee. There's a guarantee of, I'll guarantee you 5%, 10% return on your money. When I was in college, we actually, we did I don't know if it's a research assignment, something like that, into Bernie Madoff. Are you familiar with Bernie Madoff? Oh, yeah. I haven't watched the documentary yet. There's one on Netflix, I believe. I've started to watch it a little bit, but, Claire doesn't necessarily care to watch a Bernie Madoff documentary, so it doesn't frequently make it on the TV. But there's really nothing of value being exchanged, and there's usually a guarantee that you'll get a return on whatever money that you put in, and and then it eventually collapses no matter what, because the only way it doesn't collapse is if you can print your own money, which that's a whole nother conversation. But, it gets basically so big that the amount of new money that would have to come in to then pay out the previous investors just becomes so large that it collapses in itself. So how does Bitcoin differ from that? In my eyes, one, there's no guarantee. It has literally grown organically, been chosen by the market because of what it is and how it can benefit the people who own it and use it. There is no marketing team or slimy CEO maybe making you feel good about getting it, buying Bitcoin, and there's no promise of a future return. There really isn't. We own Bitcoin, we invest in Bitcoin for our clients, but there really is no guarantee that it's going to go up in value from here. And to the specific point of, the Ponzi scheme doesn't offer anything of value to the marketplace. I don't know how anyone could see that Bitcoin doesn't offer value to the marketplace. I mean, I guess we could go down that whole explanation of the value it offers. But if you just want to touch on that really quick, I mean, what would you say is the primary value if you could sum it up in, concise argument that Bitcoin provides to the world? What would it be?
Decentralized and censorship resistant monetary system. I think that's where we go next, is to expand upon that. But just to say that, yes, because that's the big kind of hitching point with all of this. Because if we say Bitcoin is a Ponzi scheme because there is no value, well, it's just that maybe you don't understand the value, and that's because it is kind of difficult to understand the value of Bitcoin sometimes. But if we understand Bitcoin to be valuable, or even if you don't understand it, but you just accept that, then to still call Bitcoin a Ponzi scheme, basically any asset we can call a Ponzi scheme, right? It's just a matter of whether you like that asset or not. Stocks are a Ponzi scheme, just because you don't understand how like you may not fully understand how a stock is valuable, but other people do. But I think if you take that value out and you're just like, well, some people buy the stock and then other people sell the stock, and then if more people buy and sell and the price goes up, and that kind of seems like a Ponzi scheme because more people coming in means the price goes up. So that's where it gets, I guess that's where I go in my head a lot, is if you're going to call Bitcoin a Ponzi scheme, then everything's a Ponzi scheme at that sense. And that's where I really think, it differentiates, A, because it is valuable, and B, because there isn't any sort of middleman. There isn't any sort of centralized person or group that is benefiting from Bitcoin. And on top of that, it's not that it is okay. Yes, old money is, or basically the people that were originally holders of Bitcoin are now getting paid by the new people, right? Like Bitcoin in and of itself doesn't have sort of any income stream. You're not getting any distributions. You can buy and hold it, and maybe the value goes up. But I mean, unless you're selling it, that really doesn't impact anything. It doesn't change anything for you. So, or you're utilizing those assets in some way. So, yeah, it's just, I mean, I get how it can seem like a Ponzi scheme. That's hopefully, it got to there. Like, I get how it can seem that way. And if there wasn't any value, then sure, like, I guess I could see that argument more. And I even think that's an argument for, why Bitcoin and not other cryptocurrencies. I don't think other cryptocurrencies are necessarily Ponzi schemes either, but they're definitely much more in that direction than what Bitcoin is. I really don't think.
Yeah, I mean,
Don't get me wrong,
meme
because there is
coins.
some, yeah,
Yeah,
it's
I
like
mean,
there's some that literally might be truly a Ponzi, but even the bad stuff in the crypto space, like, that's just mostly bad faith actors. Like, it's not that it's a Ponzi scheme per se. It's just they're creating vaporware and have a really good marketing team. Like, that's still not a Ponzi scheme at the end of the day, even though it's not good.
yeah. Yeah, I think one thing that I didn't even articulate well that you mentioned was there is no middleman benefiting from this. Like, Satoshi, whoever that was, group person, whatever. He was early into Bitcoin, of course, because he created it. But at the end of the day, it would have been worth nothing if more people didn't recognize the value of it and want to be a part of the network. And, the unlike every other cryptocurrency, Bitcoin was not pre-distributed, out to whoever that they wanted. Satoshi gave the world, the market, essentially a fair opportunity to get involved and be on the early ground floor of the initial distribution of Bitcoin. And it's honestly just, it totally blew my mind when I was first learning about Bitcoin, because it was like everything was thought of. It seemed like, that how are we going to distribute it? The incentives that were, included in Bitcoin mining and everything like that. It was just the proof of work, of course, it was just honestly insane, because it felt like every single thing had been thought through and was kind of immaculately created. But anyways, there is no middleman that's benefiting, from Bitcoin right now. There's not a Bernie Madoff in this case who's just siphoning off of, other people's money, and in leading to an eventual collapse. Um,
I think
and
it is
even
important.
with oh, go ahead.
The Satoshi thing you said, just to elaborate, Satoshi, we can pretty well know how much Bitcoin Satoshi owned, whoever this person or entity was, because he or they were the first ones that were mining for a while on Bitcoin. So they mined a lot of Bitcoin early on, and they mined for a good while, and you can actually see that. So it's estimated that that person or group owns about 1.1 million Bitcoin. So that's $60,000 valuation. That's over $60 billion. So it's like to say, oh hey, someone's really benefiting. Well, yeah, maybe, but that 1.1 million, not one single sat has been sold from that since those beginning days. And so it's like, all right, if you would think that this, if you want to say that, okay, well, the creator, they're the ones that really benefit. Well, you would think by now we would have seen some of those sats move, some of those sats be sold. I mean, at $66 billion, that's a lot of money to just have sitting there and really not affect anything in your life. So even more to this point of, no real one group or person is benefited, or acts as a middleman. They certainly don't do that. One person or group is benefited. Sure. I mean, people who are early benefit more because they were early to it, but that's kind of the nature of a free market in this sense, and kind of the benefit of of the system itself is you can opt in and then benefit from it if it continues on as it has.
Yeah, because the earlier you are, the more risk you're taking. I mean, there's no one's using it, no one thinks it's valuable, whatever. So if you're putting in time and energy and resources to own it, mine it, whatever, you're taking on more risks than someone who buys in 2024 and now it's an ETF and there's millions, of addresses, and there's who knows how many miners, how much computing power in the network at this point. So he deserves it. If it's a he or that, whatever group, whatever, they deserve it, for the incredible technology that they created.
Mm-hmm.
Any other thoughts? Oh, another thing I was going to say, speaking to your stocks, stocks could be Ponzi schemes. I think the kind of difference that people will say is, oh, stocks are producing products or offering services, and people are paying for those products and services, and that's kind of how the business grows in value, and theoretically, that's why the stock grows in value. Um, and Bitcoin doesn't have a product or service. But if you're somebody who, is in Venezuela or, Argentina or whatever, and your native currency is being used as toilet paper and fire starter, all of a sudden Bitcoin is extremely valuable, to you, because the money that your country is circulating is completely worthless. And so you need to store your wealth in something. Well, here you go. There's Bitcoin. There's no, it's anyone can use it. Anyone can, send it across the world. There's nothing preventing you, as long as you have an internet connection, from owning some Bitcoin. And so it's extremely valuable, to that person, or if you or I were cut off from the banking system tomorrow, couldn't accept payments, via our payment processor for our business or whatever, we're just completely removed. Bitcoin would be extremely valuable, to us. So we didn't even really get into the fixed supply and all that stuff, but whatever.
Well, and yeah, I guess if that's where you want to go from this, is talk about why it's valuable. We can, but
Yeah.
yeah, I figure we can focus on the higher level issues. But yeah, I mean that's kind of the beauty of it, in a sense, is that people, if you come at it from the angle of it's not valuable, that is the easiest hurdle to overcome, because even if you personally don't have a need for decentralized and censorship resistant money, that is a need, and that is a good thing for people to have access to, even if you don't personally need it. And so yeah, just to get back to that value, because yeah, that, again, if it really wasn't, if it was just, well, we're just replicating dollars in some sort of digital format, or replicating a different type of dollar in a digital format, and it's doing nothing different than what dollars are. It's just, yeah, there's an early creator and it's made them a bunch of wealth. And okay, sure, like it's still not a Ponzi scheme, but it, it's definitely something that's not as valuable in that sense. But
Mm,
since it's not the case, there is value, and
hmm.
again, I don't think we'll get into it, but that value runs much deeper than maybe what you would think initially.
Yeah, for sure. For sure. All right. So, next one, Bitcoin has no intrinsic value. I have a good thought on this that I've tweeted out a few times and I've shared it in a few conversations. I don't even know if I've said this to you yet. Um, but
I don't
I'd be
know.
curious for you to share first now what your thoughts are on Bitcoin having no intrinsic value.
So you're just gonna leave me hanging like that? Just be like, I got a real good thought in here. You go talk about it.
Oh, man.
I mean, we just talked
So,
about intrinsic value, did we not? Like,
well,
is that not exactly what we just said? The intrinsic value, because that's the thing. Intrinsic value doesn't mean that something has like something worth $10 is something worth $100 is more valuable than something worth $10. Like that's not intrinsic value. That's market value, right? Intrinsic valuable is there's something
mhm,
inherently, you know, valuable to the people that are using it. Like that's the I guess the intrinsic nature of it is the
mhm,
good or bad does not come from the perceived market, perception of it. It comes from, really if it's okay, hey, if it really is a good or bad thing. And that's where it does get
yeah,
interesting because then I suppose it probably brings kind of an ethical and moral lens into this too. Because you
yeah,
might have to have a certain sort of ethical or moral view to be like, yeah, Bitcoin does have value, right? And then if you have a different ethical or moral view, maybe you really don't. Maybe you're like, um, it doesn't have value. So I don't know. All that to say, I'm more interested to hear what this whole secret, whatever you're saying is, and then I can keep going.
yeah. So I thought about this in the shower for a while one day.
Shower thoughts.
Yeah, I mean it's the you come up with the best thoughts, ideas, everything in the shower. Um, so first of all, I think when people in finance at least, when people say intrinsic value, what are they really referring to? I would say this is my own definition, but I would say they're really referring to the lowest amount that someone in that market is willing to pay for whatever that good is. But you're still looking at it from the perspective of the market participants that are interested in that specific group. It's not intrinsic by definition, then. If, and how I thought through this for myself was okay, if I'm 75 years old, I have 4 kids, 10 grandkids. I'm out on 20 acres, enough money to live out the rest of my days. Google has no value to me. I would not pay $1 to buy the business of Google. You know what I mean?
Mm-hmm.
Or gold, let's say. People say, oh, the intrinsic value of gold, I can melt down this ring or this bracelet or this jewelry and I can sell it for X amount. Well, you're still
Mm-hmm.
basing that intrinsic value on the market value of an ounce of gold. But to someone who gives zero cares about gold, their intrinsic value is zero. They don't care about it. It has no value to them. And so I think intrinsic value is actually something that nothing on this earth has except for human life. Because I Googled when I was thinking through this, I Googled in the definition of intrinsic and it says like naturally belonging. So you're saying that something naturally has value because of what it is, regardless of any perception that is put on it. So I thought through that and I was like, okay, if no one existed on the earth, nothing would have value outside of the human life. And that's because we were created in the image of God. So obviously
Yeah,
it
but see,
gets
I disagree. I actually disagree with this. I think if you go down that route, then everything has value because everything is created in the image of God, even things
No,
we might deem bad. Yeah, everything. No. He literally created everything that we know. So everything that's created is in the image of God.
no,
Even if
we
that
were
thing,
the only thing created in the image and likeness of God.
okay,
He
in
did
the image
create
and
the
likeness.
world.
Created. Okay. So if it's God created, not image and likeness, let's take that out. That's a good point. But outside of that, okay, if God created everything, then that means that everything has intrinsic value because it does at least have some attribute of God because it was created by him. Him as the creator creating the thing, that means it cannot be completely unaffected. And it gets back to a Christian principle. If everything can be used for good or bad, right? Every created thing, everything, human created, God created, whatever, it can be
Yeah.
used for good or bad. So, and that's where I get to. So everything has value, intrinsic value, because it is a created thing, because we are created reality, basically.
Yeah, I mean, you just went from nothing to everything. So it's either like it's one of those things where like if there's infinite of something, then it's worthless. It's like I think we're saying the same thing, but from different sides, essentially. But that's my perspective. I understand what you're saying. Um,
Yeah.
so, anyways, the common Bitcoiner response that I've found to this specifically is value is subjective. Everything that is considered valuable is subjective, and so I took that a step further and just saying, okay, if value is subjective on everything, well, then to someone, everything is valueless, except for, in my mind, humans, because we were created in the image of God. That's obviously our faith coming into play there. Someone else would, I'm sure, disagree. Even with what you're saying. So the fact that it has no intrinsic value, I think most people are just misled by the definition of it. But if you just really define the word intrinsic, you'll kind of come to probably a similar conclusion that we do. You'll at least come to the subjective conclusion of like, well, the value of everything is really subjective to the person who, is assigning its value at that point in time. Like,
So it's just circular reasoning is all it gets to, and that's why you then get the financial definition of intrinsic value, which is a discounted cash flow model, or we can liquidate assets for
yeah,
whatever
book
model. Like,
value.
yeah, right, yeah.
Yeah,
It's like, okay, cool. Like,
but
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 that's why
even
you
then,
get that. Go ahead.
even then though your book value is based on what you could like sell the machine for or the metal for, or so and so yeah.
Right. Yeah, I'm not disagreeing. I'm just saying that's why you get to that point because, yeah, if value is truly subjective, which I even think that argument's just kind of, I mean, I understand it, but I don't agree with it because I think, and again, this is, our faith, but value isn't subjective, it's objective, and we get that from God. Like, what is valuable? God tells us what is valuable, and the most valuable thing is being with him, being in a relationship with him, is knowing and seeking and loving his will above our own. Like, okay, that's objective value, and then from that seed, so to say, the fruit in the rest of our life does impact us and informs us on the things that are objectively valuable. And the reason it's objectively valuable is because he is, the creator of all. So if he's the creator, that doesn't mean that there's subjectivity in what he says is valuable or not. It's like the painter. It's like the painter wants to use blues and greens instead of reds and yellows. Well, then that is objectively more valuable to him because he made the choice to do that. So it is it is an interesting thing to talk about. But I do think from like to kind of come back up out of this, like
Yeah, right,
I,
right.
I do think it's the financial aspect of it, where and that's where we got down. This is I get where we get to where we're going, but I do also understand when people say there is no value because you can't touch, you can't hold, you can't see a Bitcoin. It's just a number on a screen, right? Even gold, you can touch, see, taste, smell it, whatever. You can't do that. It doesn't have discounted cash flows, at least Bitcoin itself. So you can't, or it doesn't have cash flows, so you can't do a discounted cash flow analysis. So I
Mm-hmm.
get that, from that perspective. And, I do think it's like you have to kind of have the conversation that we're having to understand where then the value of Bitcoin comes from. And I do like the intrinsic value. It ties into what we were just talking about. The intrinsic value is that, in my words, it's a more just form of money. That's really what it gets to, is it is a more just form of money compared to fiat money. I don't believe that fiat money and basically the economic reality that we're living in is really something that's just. It's really been turned into an unjust system, where it benefits the few at the expense of the many, and that's not just. And so that's really what I get back to. Okay, what do you say the intrinsic value is? That is that intrinsic value. Yes, people will say, well, gold was kind of the same thing, and look what happened to gold. And they'll even say all the arguments about the whole, physical aspect of gold. But, even above and beyond gold, Bitcoin improves, right? We talked about that in our previous episodes, right? Like how, yes, gold was a good form of money for these reasons, but here's why it's no longer that good form of money, namely
Yeah.
its portability and divisibility. And so, okay, because of that, that's why we got or moved towards this fiat system. And now that we've fully gotten to this fiat system, it's like, wow, is there something that we can combine the benefits of gold, scarcity, namely, with the benefits of fiat, portability, divisibility, all that sort of stuff? And that's what you have in Bitcoin. And it just so happens that there's other huge benefits to Bitcoin in the decentralized and censorship resistance too.
Yeah, for sure. All right, let's go to the. Uh, let's see. I got a list here, and I want to pick the best ones before we get to the others. So,
Did you check
um,
it twice?
I think maybe the next spot we can go, and I think this one is hard to wrap your mind around because it's just upside down than what our current system is. But the fact that there are 2 quadrillion satoshis and effectively infinite amount of satoshis, so people will say, well, yeah, there's only 21 million Bitcoin that will ever exist, but it can be divided infinitely, so therefore it's not scarce. And that is their argument against Bitcoin. I even heard that in the debate between Jack Mallers and Peter Schiff, who's a gold guy. Jack Mallers being the CEO of Strike, a Bitcoin exchange, and um, that company. So, what would you say then to the person who has heard that argument that, oh, it can be divided into so many units or maybe even infinite amount of units, therefore it's not scarce?
Yeah. Well, I'll use the default example because I
Yeah,
think it's a good one.
feel
You,
free.
you
Yeah.
have a pizza. You can cut a pizza into a billion different slices, but you still only have one pizza. You can cut it into 2 quadrillion slices, but you still only have one pizza. The difference between that and what we currently do is, well, you have one pizza, and once you divide that enough, it's, well, let's just make another pizza. Once you maybe divide that enough, let's make another pizza, and then it's like, well, we don't even need to divide it, but let's just keep making more pizzas because we really like pizza and it doesn't really affect anything. So that's the difference. Is you truly, in our current system, you have an infinite number of pizzas that can be created at basically no cost, versus in Bitcoin, yeah, theoretically, just you could have whether it's quadrillion or quintillion or septillion or whatever, like the divisible
Mm-hmm.
amount, it's still only pulling from one pizza. And
Yeah.
that just, really what that gets to then is the amount of the pizza that you own, it never changes. It never is diluted, I should say. So if you own, let's say the pizza is cut into 6 slices in the beginning, and you own one of those 6 slices, okay, well, we cut it into 24 slices. Well, maybe your 6 is cut into, what is that, 2 or 3 separate slices now, but you still own what was representative of 6 slices, barring any sort of you bought or sold or whatever that slice of pizza. You still own 1/6 of that, even if it's been divided into more. Versus, again, the other example, okay, you own 1/6 of one pizza, and now a whole other pizza comes along. Well, now you only own 1/12 of all the pizzas, and another pizza comes along and you own 1/24th. Another pizza, I'm not going to keep
Yeah.
going with fractions, but
Yeah.
that's the difference. What you own stays the same, and that is again
Yeah.
Bitcoin and its value is okay. Well, that's exactly what it is. You can put your time and energy represented by money into Bitcoin, and okay, yeah, it can be divisible into 18 quadrillion septillion parts, but your value is still going to be kept the same. Actually, the divisibility is wonderful because that just means that more and more people can have access to it if we ever get to the point that that's even needed.
Yeah. And the more people that have access to it, the more valuable it makes your portion of the pie or the pizza in this case. So
More
yeah, I
people
mean,
that are fumbling one pizza, the better off we are.
yeah, yeah, and so really, people who use this as an argument and think they're saying something legitimate just don't understand fractions. They maybe just need to go back to like elementary school or something. I'm not sure. When you learn whatever grade it is where you learn how to deduce fractions. So if it's like, oh, it's, uh, 10 100ths, what if you reduce that fraction? What is it? Okay, it's 1/10. Because you have 10 100ths all of a sudden doesn't mean you don't have 1/10 of what exists. Like you have to still reduce the fraction back down to understand what your proportion of the pie is. And that's exactly what you're saying. Yeah, I don't. There's really. I don't even know how someone would still say that. It doesn't. Um, Maybe the argument that would get tacked onto that is like, because it's fixed supply, it can't be used as a global form of money like we would say that it can. And
Mhm.
the then argument right back to that is, well, it can be divided into an infinite amount of pieces. And so,
Mhm.
yeah, it's 8 billion people could utilize Bitcoin as money and it would work just fine. They may own only 0.00000001 of, one Satoshi, but, that the equivalent value of that amount could be substantial, down the road when you have a fixed supply of the money in general. So,
Mhm.
yeah, I don't relearn fractions, I suppose. I don't know, but yeah, that one, there really is, that is probably the best argument, is that one large Domino's pizza doesn't solve world hunger or something, is what Bitcoiners usually say, and I think everyone would agree with that. Um, so yeah, I mean, we'll go on to the next one. There's not much more to say. Um, let's see. Let's talk about the argument saying Bitcoin is just too volatile. It's too volatile. It will never be used as money, is usually what follows that up, because it's just too volatile. What would you say in argument to that?
Yeah, I mean, I'd say people are right in some respect. I mean, it is volatile, right? You got 90,
Mm-hmm.
80% drawdowns. Like, to say it's not volatile, that's not true. It is. It's extremely volatile.
Yeah.
Um, but that volatility both works both ways, to the downside and to the upside, right? That's what we've seen. Yes, we've had 90% drawdowns, but it's also had you know, however many thousands of percent return since its inception. Um, and so, yeah,
Mm-hmm.
that does prove to be a stumbling block for people, especially when they're like, well, you're talking about Bitcoin being money. How can it be money and then be volatile at the same time? It gets back to something we talked about in the previous episode, where it's, well, if Bitcoin is going to become, a actual money, and this is where we talked about before, it's like, okay, Bitcoin has the attributes to be a good money. It doesn't mean it's money yet. It's going through the development phase to become money. It's just easier to say Bitcoin is money now, because that really is what it's designed to be, is to be money, even if it's not fulfilling that function right now. But
Yeah.
to be clear, basically what it is yeah, it's volatile, and the reason it's volatile is because it's very early on. It's we're whatever 14, 20, I can't remember.
15.
Yeah, however many years, right? It is a very short amount of time that Bitcoin has been around, and I truly believe this. It's the first new form of money since gold, or at least store of value since gold. Fiat money was never a store of value. Fiat money is just took gold and made it a better money, basically, or took the backing of gold to make it a better money.
Mm.
So it's very early on, and gold was used for thousands and thousands and thousands of years. Um, and so, yeah,
Yeah.
volatility in that sense is to be expected. It's the same thing with any new technology. Like, look back at the early days of Amazon, Google, Facebook, whatever big tech company that rules us today. It's like, go and look at their stock across time. Like, it was more volatile in the beginning than it is now. They're still somewhat volatile for sure, and they're not money, so they're likely going to continue to be more volatile. But
Mm-hmm.
because Bitcoin, and hopefully that's what we kind of say, hey, this is a possibility over time. Bitcoin truly does become money. What you would expect is that volatility decreases over time as more people adopt it. You would think that volatility would decrease into the point where, yes, it's still going to fluctuate. That's actually kind of a benefit because you want to talk like from an economics perspective. We might want the value of this to fluctuate a little bit because then that allows it to react to what's going on in the world, right? Like it really does truly allow that supply demand equation to act as it should versus where now we basically, have not good information. We aren't able to make educated decisions
Yeah.
because fiat money just, uh, messes up that equation.
Yeah. Um, yeah. I mean, I obviously agree with you. Um, I think one reason why people don't realize that maybe the dollar is somewhat volatile, we'll say, is because it's our unit of account of the things that we go and to go to the grocery store and the apple cost $1 or whatever it costs, and so we don't necessarily realize that the volatility of the dollar, even though 14% of the you know the national debt grew by 14%, over like the last year or something like that. So technically the dollar diluted by 14% in some ways, um, however much gets added to the supply. So if Bitcoin were to be the unit of account, we go to the grocery store and it's 0.5 Bitcoin for whatever, um, you wouldn't necessarily think it was as volatile. We're describing its volatility in dollar terms, and the amount of dollars in existence always also throws off that market price, and makes it even more volatile than it would be otherwise. I would say if the dollar was stable, had a fixed supply, Bitcoin wouldn't have as much volatility, and we probably wouldn't
We
even
wouldn't
need
have
it.
Bitcoin if that was the
Yeah, I was
case.
gonna say we probably wouldn't even need it in the first place. But um, yeah. So,
I do think
anyways,
there's
yeah,
something to touch on there too. Is basically what we're saying is that yes, because things are priced in dollars, it seems like there is no volatility. But really, the effect of money printing and basically fiat currency in general is that it might reduce the seen volatility, that this actual up and down. But in effect, all it's doing is just making volatility go up. In some sense, it is basically saying there is no downside volatility. Things hardly cost less across time. It's pretty much only up, and that's because there's just more money to go around. And so, it's
yeah,
a different form of volatility, so to say. It's not, what we see in Bitcoin. I'm not trying to say it's the same, but it does make it seem like there isn't any. But we do know for a fact. I mean, people can feel that over the last 4 years. How much has your average monthly expense gone up when you're feeling like you're living life even more lean than what you did before, but somehow you're still spending more money? Well, that's because there's more dollars in circulation, so everything costs more after those dollars come into circulation, and that's why even if your standard of living is less, you're paying more than what you did before. So that is a form of volatility, but it's certainly not the volatility that we see in Bitcoin. There was a second part to what you said. So it's something about volatility and something else, and I don't remember now in your question.
uh, oh, I think I just said like the follow up to what they say. It's too volatile. They will say it's too volatile. It can never be used as money. Is usually
Uh-huh.
what the full sentence of what people will say
Yeah.
is, and so you spoke to that already. Um,
Yep.
yeah. So I think that's good. Let's see here. What else do we got? What would you say to? the person who says that Bitcoin incentivizes hoarding. I heard that. I think it was actually a podcast that I did a while ago now, but the guy wasn't necessarily Bitcoiner. He owned some, and then that was something he had heard. He didn't believe it, but he didn't understand how to argue against it. So I'm curious to hear what you think when people say, "Oh, that just incentivizes hoarding." Therefore, it's not a good, I don't know, form of money. Maybe as what they're kind of thinking of it as. But what would you say to that?
I would say that there's a reason why the Catholic Church still uses its Latin as its foundational language, and we talked about before. That's because words change and have different meanings across time, but Latin as a dead language can't change its meaning across time. And so, in this sense, what we're doing is we're changing the meaning of what savings is across time. Maybe the word itself doesn't change, but we're changing what it is. And we're saying that, hey, you can't save money, that's hoarding money. And again, this is actually an implicit idea behind Keynesian economics. If I said that right, I know it's not Keynesian. Keynesian
You're getting
economics.
closer.
um, it's an implicit idea behind it that, yeah, actually savings isn't necessarily to be encouraged. That's why we have a debt-filled society. That's why, basically our world runs on debt, and especially the big areas of our life. We have our homes and our cars that we have to basically buy with debt unless we've got a ton of cash. Um, that
Yeah.
truly is the incentive. And so that's where we get to this. Well, no, saving is just hoarding money, and you shouldn't do that. You should be using that to basically put back into the economy in sort of some productive sense. By having that mindset, the flip side of this, by saying, well, you shouldn't hoard, i.e. save, is that now we're all forced to be investors of some sort. You should be investing your money somewhere. And that
Or
has a whole,
spenders.
or spenders, exactly.
Yeah.
Yes, either one. Don't hold your money, spend or invest. Those are the two different things that you can do with your money, and those are the two different things you should do with your money. So talk about downstream effects. Look at our world. Like, I don't know if we even need to say much more, but that whole idea of now you're forced to either spend or invest on the investing aspect, it's, okay, well, why do you think we have zombie companies? Why do you think that index funds are so popular and so used? Well, it's because it truly is. The S&P 500 is our savings account now. Like that truly is what it is. And that's the thing, is like you're just moving it up the chain, right? Like you said, well, you don't hoard Bitcoin. Don't hoard the S&P 500. You're doing this. It's the same thing there, right? Like it's literally no different. You're just buying and holding the S&P 500 in your 401k, and more people hopefully are going to buy it so that you can sell it at a higher price in the future. Like, it gets back to that whole Ponzi argument. But it's just
Mm-hmm.
it's the most not the most, but one of the more infuriating things, the whole hoarding aspect. Like, no, that is what we should do. We shouldn't have to do these other things with our money. We already went and risked our time and effort and energy and worked for that money in some sense, and used the minds that God gave us to go and do whatever we were doing. Now we have to go back out and we have to spend that on something that we probably don't need, or we have to invest it somewhere where we don't really want to invest it. Right? Like if people really looked at the S&P 500 and looked at all the companies in there, and this is why we have direct indexing, of course, but if they actually looked at that, and especially looked at a broader based index and looked at all the companies that you're actually holding money in, they would be very surprised to realize how many of those companies they probably really don't agree with, and they really actually don't want their money to be going towards and helping. But it's like, what choice do you have, right? Some people will say, okay, well, that's why I own Bitcoin. Or some people will say, well, that's why I just go buy individual stocks instead. But
Mm-hmm.
it really is. And that's part of the detriment. I mean, talk about the downstream effects of this now, so this is going a little bit tangent, but I do think this is important to say. Um, so people, like, the common meme, or the common myth you might hear, is that Vanguard and BlackRock and State Street, they own all these companies, and so they have all this control because they own all these companies, right? Because basically people will look on the investor list and see that, yeah, Vanguard is the largest owner of a company, or BlackRock, or all three of them together, whatever. And
Yeah.
that's not fully true. And the reason it's not fully true is because that ownership percentage is representative of our shares of the funds that we hold. So we
Yeah.
buy an ETF from Vanguard, BlackRock, whatever, and then that, those totaled up represent that ownership interest that we're seeing on these documents. But that's still not the full story, right? Because yes, while Vanguard or BlackRock itself doesn't own it, what they do is make decisions on our behalf on those companies. So what that means is that, so your share, when you own a share of a company, because you're an owner, you have some say in what happens in that company. Even if it's just one share, you can vote with your one share and say, I don't support whatever is being proposed. But pretty much every ETF, every mutual fund, most 401ks, all of these are the same, where that ownership percentage, that whatever we own in those funds, we basically say when we buy those that we're relinquishing our rights to vote on whatever issues come up, and that Vanguard or BlackRock can make the decisions for us. So while
Yep.
they may not directly own those companies, we talk about the influence they have over those companies, especially when that's, some of those, it's like they're own 30% of a company, right? Through our shares. Like that not is true ownership, but it's actually the best form of ownership, because they really don't have much of a fight per se. They're just making the decision that, hey, we think we should make. And that's where you get, companies, why so many public companies, go woke, whatever else with it, is because, hey, like, they're beholden to what these shareholders are saying. And those shareholders are the BlackRocks, the Vanguards, the whatever else. And
Yep.
so, when we talk about, this, again, to bring it back, this hoarding aspect, okay, well, yeah, you shouldn't hoard Bitcoin. Well, that's your alternative, right? Like, okay, if you want to go through the hoops and you actually want to submit your proxy voting on the 500 companies, there are 503 companies in the S&P 500, every time they
Yeah.
come up, you go right ahead and do that. I don't want to do that. So I'm going to hoard.
Yeah.
I save.
Yeah, I mean, 100%. I just replied to a CFP. He was like, "Oh, he quote tweeted some video of a guy saying, "Oh, BlackRock, State Street, Vanguard own all the big companies," and he said, "This is just the stupidest conspiracy theory I've ever heard because of it's owned through ETFs and mutual funds." And I said, "Well, yeah, but you're forgetting that whoever is the shareholder gets the voting rights for the company. So if they own 60% of the company between those three businesses, well, they are obligated to do what's in the best interest of their shareholders. That's the definition of a public company and why you're a shareholder in the first place. Like, you're the board of directors and the leadership of that company is obligated to operate in what is in the best interest of the person who owns it. So, anyways, I'm totally with you. One thing I'll add is just that consumption doesn't need to be incentivized by a central planner. Consumption doesn't need to be incentivized by the Federal Reserve. We don't need lower interest rates to incentivize us to buy a house. We don't need lower interest rates to incentivize us to go on vacation, go to the grocery store, want to have a car in the driveway, have running water at our house. Like, I think we all could agree that if a good is valuable to us, we'll go out and spend money on it, regardless if, the Federal Reserve says the interest rate is 1% or 10% or 100%, whatever. So we don't need this money printing to incentivize you and I to go to the grocery store and buy some ingredients to make a nice soup or something in the wintertime. Like, that is just a total fallacy. That's just been made up and then kind of, pushed onto everyone through, I would argue, the education system, because that's just what they wanted everyone to believe. So we'll just teach
That's
them
what, it's
that.
not a fallacy. That is Keynesian economics. Like that,
Yeah.
it's not a fallacy. I'm not disagreeing with you, but it's
Well, I'm
not.
saying
That's
that
literally. Go
I'm
ahead.
saying that the belief in Keynesian economics is that consumption needs to be incentivized by a central authority, the Federal Reserve, but that
Yep.
belief is a fallacy. Like,
Yes.
um, yeah. So spending on consumption doesn't need to be incentivized by the government, the Federal Reserve, spending a bunch of money, printing a bunch of money, whatever. And I think also this whole using the S&P 500 as your savings account also contributes heavily to this wealth gap that everyone always complains about. So yeah, we have the wealth gap where the people who are poor get affected most by inflation because of money printing, and that makes them even poorer and poorer and poorer over time until eventually they're just completely dependent on the government. But we also have this middle class who is using the S&P 500 as their savings account. And what does that allow these major corporations to do? It's a centralization of resources. And so then they can use, we see MicroStrategy leveraging this to buy more Bitcoin. They issue debt because they're a public company. Their share price, goes up. They can continue to issue more debt, use that debt to buy Bitcoin. But if the share price keeps going up because we're just investing in the S&P 500 and the company who knows what they're doing, they can continue to issue more and more and more corporate debt and just consolidate those resources, gain more power, buy other, acquire other smaller companies, and really have no real free market. They'd have no competitors, nothing like that. And, those conspiracy theories that really aren't conspiracy theories, where every single brand in the grocery store is owned by like 3 companies, is the truth. And this is why, because they have access to the cheapest debt because we continue to invest in their company because they're already the biggest. And so they just continue to swallow up more and more and more of the entire marketplace. So,
Oligarchy, gappy, I can't say that word. Oligopo, yeah, whatever.
I don't know what you're saying. I don't know what you're saying, but sure.
Olgopoly. Oliga, yeah, I can't say it. It's like saying real. It's exactly what you're describing. It's a few firms have the most power, and they basically just maintain the power between themselves. That's how every industry is becoming in our states. This is the whole like, well, I guess just the whole idea that you just were talking about.
Yeah,
I want to call it oligarchy, but I don't think that's oligopoly. I don't know, something like that. Look it up on Google later. It's an actual word.
Whatever.
I just Googled it because I couldn't remember how to say it, and the letters spelling did not help me.
So, anyways, yeah. So incentivizing hoarding, just to bring it back to, we kind of went big picture there, to bring it back to really address that argument is it's okay to save money and save it for a future use. Eventually there will be a use for it. You'll want to go ahead and spend it to enjoy a family vacation or get a little bit nicer car or love on your house a little bit and put in some new cabinets or something. And if you could just save your money and not have to worry about it getting printed away, then your life would actually be a lot better. Mm-hmm. So, I think we both got on a rail there. Getting fired up. It's getting us going. Okay, so we did Ponzi scheme, no intrinsic value, too volatile, 2 quadrillion Satoshis or infinitely divisible, incentivizes hoarding. I think this one is probably, these two would probably be the best to end with. It can be copied, so it's a software, so you can just copy it and it's theoretically, I could start my own Bitcoin tomorrow and we're good. So a lot of people will say that it can easily be copied. And the second one is they're worried about who created it. So people will say, oh, it's created by the CIA or it's created by the government or the NSA or, whatever you want to say, insert 3-letter agency here. And they believe that, that is a bad thing for Bitcoin. So let's just start with can be copied, because I think this one is maybe a little bit quicker to go speak to. And then we'll go with end on created by the CIA or whatever organization.
Yep. Well, it certainly can be copied. And if you wanted to, you could also drive on the opposite side of the road in the United States. If you want to do that, you can do it. You're going to crash into people pretty quickly because no one else is accepting what you're doing. But you can do it if you want to. Bitcoin can be copied. It's a funny example, but really what this gets to is there's a few primary things. Is for one, this has already happened, right? So Bitcoin has been copied. Actually, many times. Sometimes directly, sometimes, hey, we'll make a little tweak here and we're going to do better here. Like many people have done that already. go look at the price chart of any of those compared to Bitcoin over that time. Go look at the adoption of those compared to Bitcoin over time, and you're going to see that the likely outcome, it's the same as the person that wants to drive on the opposite side of the road. They crashed and burned pretty quickly. Um, and this argument or this idea, um, it did have a lot of merit, especially early on in Bitcoin. Right, when Bitcoin was a smaller project, then yeah, sure, like there is definite risk that, hey, yep, we're gonna copy and paste, and we're gonna, instead of 21
Yeah.
million, we're gonna make it 42 million. I mean, honestly, this was what the block wars was all about, right? Block wars is basically just, and where, well, I'll probably circle back around on this in a minute, but block wars is basically just this idea that Bitcoin doesn't have enough capacity to actually become a digital money across the world. And so we're going to make the block size, which is basically how many transactions we can fit in one individual block, higher. There's trade-offs to that. I mean, there was a whole nother chain of Bitcoin that was created on that quite literally the only thing that was changed was that block size. Well, we can see what happens. The same thing as the person that drove on the other side of the road. So, what this is commonly known as is network effects. As the number of people within a network grows, the value of that network grows exponentially. And so what you get then is, once you reach some sort of uh, snowball point, that's not the best word, but you probably know you have it.
I mean,
I was going to
what,
say
like escape of velocity, basically.
maybe
I
something
think
like
what
that.
you're
Yeah, I
saying
can't.
is you grow to a point where no one else can catch up, basically, to overcome the amount of people in your network.
Right. And so people will then say, because a lot of the times the example around this is, it's like, the Facebook, the Amazon, the whatever, right? We've got these huge companies that it's like,
Well,
well, yeah, they
I think it
go
is
ahead.
good to just say that really quickly. Like, I think that's relatable for a lot of people. Like, if you're on Facebook or Instagram, let's say someone came out with an identical Facebook tomorrow, identical. Everything's the same. They didn't change anything. Would you switch from your current Facebook to the new one? No. No. Why would you? All of your friends, all of your family, all of your profile and your posts and you're already in the existing Facebook. The other one's exactly the same. You have no reason to go to the new one. Absolutely not.
And so this is where it does get interesting, because then the argument against that is, okay, well, it's not Facebook, but it's the MySpace to Facebook type thing, right? So MySpace used to be Facebook, and then Facebook overtook MySpace, right? Well, part of that is, you could say the network effects of MySpace weren't great enough that they could be overcome yet. You can make the same argument with Bitcoin, and we'll get back to that. But this is the whole one of the big premises behind this, is that, okay, Bitcoin can be copied. Yes, it can be copied for sure, but it's very hard. And every year that Bitcoin continues to grow, adoption continues to grow, that gets exponentially harder. Every year that more hash rate comes online, it gets exponentially harder for another network to overtake Bitcoin. That doesn't mean there's not going to be other networks. That doesn't mean there's not going to be other projects, other cryptos, and that doesn't even mean that those other things aren't going to outperform Bitcoin. But most likely, they're not going to outperform Bitcoin over a long period of time. It might be an interim period of time, but it's not going to be a long period of time. And really, what that gets to, in that sense, is that we talk about this concept of total addressable market. So total addressable market is just basically, all right, for any idea, any concept, any business, how broadly addressable is this? How many people can actually find use in this? So that's where we see with social media. That is why we can kind of relate this, because social media is something that, if we take away the detriments of social media, the concept itself that we can connect with anybody across the world at any time instantly, that's pretty awesome and pretty beautiful in a way, right? Like that.
Yeah.
Yes, it's been bastardized, whatever, but it really is cool, and that's actually quite useful to pretty much everybody, right? In some sense. I'm
Yeah.
not saying it's useful in the sense that maybe it's used today, but it is useful. So it's a very broad addressable market, right? Now there's extents to that. There's an extent to what that can be used, right, to be useful. But when we talk about what Bitcoin is, as money, that is the total addressable market, is quite literally everybody alive today and in the future. And that addressable market is just going to continue to grow, as well. I suppose you want to get in the whole population collapse thing, but as long as
Yeah.
population is growing, that addressable market is going to continue to grow. So that's the other concept between Bitcoin and kind of these other, cryptos. That is, okay, Bitcoin is, its total addressable market is much greater, because you look at something like Ethereum and you look at a decentralized, world computer, dApps and whatever else. Like, yeah, that doesn't mean that those, a decentralized exchange, that's useful, but the usefulness of it is much smaller than what Bitcoin is. And so, that's why we get back to, okay, those are just different
Mm.
use cases for that. But to tie up this kind of, okay, so we have a network effect. Okay, network effect is good. Let me explain a little bit more about this, Bitcoin versus everything else type thing. There's something known as the blockchain trilemma. The blockchain trilemma is actually, it's kind of funny. It was actually, I think, originally created, if you want to call it that, by Vitalik Buterin, the creator of Ethereum. But it's basically, there's three kind of attributes to a blockchain: decentralization, scalability, and security. Any given blockchain can actually only fulfill on two of those functions. So no blockchain can actually do all three. No blockchain can be decentralized and scalable and secure, right? It can only do two of those things. And so really what we have then is, and I guess maybe to talk about that, decentralization, no central power. Scalability is, hey, this can scale to some sort of, mass growth, right? Like it can support a large number of people and transactions. And security is pretty obvious, like especially with money. Like if you hold Bitcoin, is it secure at the protocol level itself? Let's take away the scams and exchanges and whatever else, but at the protocol layer itself, is it secure? And so Bitcoin very intentionally early on made the decision to be decentralized and secure. And so, what does that mean for kind of any future tech that comes along? Well, if they try to replicate Bitcoin, they're going to try to be decentralized and secure. They're just inherently, by how these blockchains are, they're going to start less secure and they're going to start less decentralized, because there's no way they can overcome initially the decentralization of Bitcoin, because it took 14 years for Bitcoin to get there, right? And
Yeah.
there's incentives for that decentralization to continue. And so it's very hard,
Yeah.
again, when we talk about, okay, so there's network effects. These network effects compound back on this blockchain trilemma, that as the network grows and scales, both the security and the decentralization of Bitcoin also exponentially grow. And so it makes it even harder for those other networks to overcome that. So then what other networks will say is, well, we'll be, centralized and we'll scale better. Okay, well, now you're forgetting about security. Why would you hold money on that? Well, and they'll say, well, we'll be secure and we'll scale, but we won't be decentralized, but we can get there. It's like, well, how are you going to become decentralized over time? Even Bitcoin itself, the only thing it's done has become more centralized across time. To go the opposite way is very, very difficult to do. And on top of that, if you start with something that is more centralized, all you have now is something that is better replicated by a centralized server than a decentralized blockchain, a centralized ledger, I should say. So, this idea that, yeah, Bitcoin can be copied, sure, it can. It's just we're at the point now where I would argue the train's left the station as far as the viability of something else coming along and overtaking Bitcoin. Really, where we're at, it's basically just a matter of, is Bitcoin going to succeed or not? It's not something that's going to take it over. It's, is Bitcoin going to succeed? And that's the part we just don't know. We won't know until, the future. And nobody knows what the future is going to hold. So that's really what it gets to, because of those network effects,
Yeah.
because of that trilemma. It just makes it to the point now where you've got, even though, yes, adoption is still quite small on a global scale, at least in the West and, some of the East, Russia and China and all that, Bitcoin is, pretty much most people know about it. Not everybody, and, many people are completely disconnected from this world, and so they're not going to. But it really, it really is something
Yeah.
that many people know about, and so to try to overcome that, it almost is akin to trying to make a new internet and then having that overtake the existing internet and the protocols that we use now. That's why we call
Yep.
Bitcoin the internet of money, because that's all it is. Bitcoin is a protocol. That protocol is used as money, and the network effects are such that it's likely that a different protocol is not going to overtake that. And so to tie this all back up, the way we view Bitcoin is the internet itself. TCP/IP. That's an internet protocol layer that, anybody who gets on the internet, you're using that. There's competing protocols, but because nobody uses them now, or it didn't use them enough because adoption didn't grow early enough, we now have the ones that we use, and we've built on top of that. That's what Bitcoin is. Bitcoin is the TCP/IP. Everything
Mm-hmm.
else in crypto, it's
Yep.
the Facebook, it's the MySpace, it's the eBay, it's the whatever. They're websites that, even though, yeah, they might grow and be popular and be useful and make people money, it's much less sticky. It's much less of a networking effect than the
Mm-hmm.
internet itself. And with Bitcoin, we can have the opportunity to invest in the internet itself by way of money, versus maybe just a website on top of it, which is pretty cool.
Yeah. Absolutely. There's a lot of stuff there that we could definitely go into, but yeah, I mean, I think to boil it all down, we kind of proved out that if it's copied exactly, there's no point in switching. If it's not copied exactly, then there's trade offs, like you said, and so those trade offs don't necessarily work for money. I even heard somebody else say recently on a podcast that the Byzantine generals' problem was already solved by Bitcoin, and it doesn't need to be solved again.
Hmm.
And so that was an interesting way to put it. And so, yeah, essentially what we're saying is the problem with a digital money was solved already by Bitcoin, and it doesn't need to be solved again. It was already solved once. And so everything else is not money. It's really a form of security, or not a form of security, a form of investment security is what I'm trying to say. So it's like a share of a stock, if you will. Owning a Ethereum is like owning a share of Apple. Essentially, you're betting on Apple, whatever happening, but you don't own it. It's not money at the end of the day. And because of what you're saying, this total addressable market thing is money's the base layer for all economic value. And so when I can own a portion of the base layer of anything, if Apple does really well, well, my money gets more valuable over time because Apple created some good thing for the world. And so worldly value or wealth, total wealth in the world, I guess, goes up. So anyways, all right. What was the last one? Oh yeah, created by the CIA.
Hmm.
I know we're getting over an hour here, so I think we can kind of just uh,
What, you
I,
wanting to keep these to an hour all the same?
I don't know. Well, listen,
The
it
last
really.
ones were not an hour, I'll tell you that much.
Yeah, I don't know. For podcast listeners like me, I'm fine for going in for 3, 4, 8 hours and just breaking
Good.
it up if I have to. But I don't know if other people look at that and they're like, "Oh, I don't know if I want to go and get into all that." Um,
Mitch, there's going to be like three whole people that have listened to all three episodes in full and to the point we're at now. So if those three people are here, like, welcome Jim, Bob, and whoever else it is. I don't care. Like, like, I don't know,
totally,
hour versus hour and a half. I don't think it's gonna make a difference.
totally, for sure. So I would say, in short, and I'll let you expand on it in some more maybe technical details. But I would say, in short, the reason why, even if the CIA, NSA, government, whatever, three-letter organization you want to throw in there, why we are not worried about, if that's even the case, is because Bitcoin's software is, one, open source, so everyone can see what's going on, and two, it is a decentralized protocol. So not any one central authority, regardless of if they created it or not, can control it, hack it, whatever you want to say, tear it down, burn it to the ground, I guess. No one person can do that at this point. When it was early on, when Bitcoin was in the early days, and this was actually super interesting to listen to these guys talk about at the Bitcoin meetup the other day, who were mining in like 2010, whatever. They were saying how they were all super worried about like 51% attacks, and like it was also fragile, and they were all tweaking. And I was like, man, like I would have never been involved in that, even if I was not in middle school. Like I know that wouldn't have been me. getting in there. But that's just super cool to hear their stories and talk about it, because then that network effect that you're talking about was very fragile. It wasn't very decentralized yet and spread out across the world. It was just a few people, mining and whatnot. So now that it is very decentralized, spread out amongst thousands and thousands of computers, maintaining the security and integrity of the network, there's really no one bad actor that can come in and destroy things, if you will.
Mm-hmm. Yeah, for sure. Yeah, I mean I don't know. I guess that's a really good way to uh, put that succinctly. Is that I honestly think it probably was some sort of government agency. Like, I shouldn't say I think that, but it would not surprise me at all, even if it's not a government agency, but just some sort of like group. It wasn't just an individual, right?
Yeah,
Um, you know, I
I would agree
is
with
that
that, just because, like I said, I was going to say, I agree with that just because, like I said earlier, it seems like every single thing was thought of. Every single
Mhm.
potential like downside problem that it could run into now or in the beginning and in the future was thought through and protected against. So it's like, if one person did think of all that, and I know it was an accumulation of a lot of cryptography that built up, over 20, 30, 40 years, something like that, to be able to then put all the pieces together into one protocol. But at the same time, it's like, the group, whatever, created the first money that was viable for this. So I would agree that it
Yeah.
probably was a group.
Yeah, but the thing I think that gets me the most with why that maybe not is the case is if you go back and look at the early, emails back and forth, even early forums where Satoshi was posting, it was actually pretty consistent way of speaking and also pretty consistent timing as far as like the time of day that they posted. And so to me, that's like, okay, it doesn't mean it couldn't be a group. It could just mean it was a group and they had one spokesman, but that also doesn't make sense. Like, the people that are doing this, why would they not all be involved in having these conversations? And so that to me actually lends to that. No, it really was one individual. It was that culmination of people across time, and that one individual, or culmination of people, protocols, whatever, across time. And just even the fact that, early on, like, it still kind of was a test bed, right? Like, Bitcoin's uptime is not 100%, because in those early days, I think there's, I don't know, a couple of times, I think it was more than once, where the network did stop for a while. So it's like 99.9999% uptime or something like that because of some of that.
I saw I
So,
saw a tweet I saw a tweet about that the other day. Someone was doing the research and they said that it probably was Satoshi doing his own 51% attack just to see how it would work. Like to
yeah,
make sure it would, just to test it. And so he would shut it down himself and then turn it back on, basically.
no.
But
And actually, it might be even good to talk about, what in the world is a 51% attack, and, why is it, um, why is it something that even today is still, I would say, a risk to Bitcoin? So a 51% attack is basically just, you've got, an entity, likely just basically someone that can own a large amount of Bitcoin miners. Whether it's an individual or an entity or whatever, or even just a group of people that own a bunch of them together. Um, they're basically either, by their own decision, or they're in, some some way incentivized, maybe not using the most savory means, basically to create an alternative blockchain, or even make like fraudulent transactions. Basically what it gets to is, it gets to the point that this entity, group of people, individual, whatever, they control 51% or more of the network hash rate of Bitcoin. So all these miners, these are very specialized computers, and all these very specialized computers are all working very, very hard to basically guess a number. And when they guess the right number, then okay, they have basically found a Bitcoin block and are rewarded for that. So all these entities are co-opted together, and they get more than 51% of the entire network. And once you can control more than 51% of the entire network, then you might have a problem on your hands around, okay, are we actually now no longer decentralized, right? That's really what it gets to, is as long as people are below that, um, or at least more likely when entities are below that 51% threshold. Um, you don't really have that ability. But once in the reason I'm kind of hesitating when I say all this is because 51% attack actually is kind of a misnomer in a way. You could actually theoretically have somewhere like 30 to 40% of network hash rate and basically in effect have or do a 51% attack, but that's another topic for another day. So again, this 51% attack, when we're talking about this, it's a group of miners, whatever, coming together to get more than 51% of the hash rate. And basically, this hash rate is part of the security mechanism that makes Bitcoin secure, makes Bitcoin centralized. They do that, and now they act fraudulently, act poorly towards the network, whatever else, and it's like, okay, that could be a severe threat to what Bitcoin is and what it stands for. And so that's why we're kind of talking with this. That is the downstream effect or downstream fear of kind of this. Well, what if it was created by this individual entity? Like now, that's how you could say, well, that's an individual entity. That's how they could come in. The original
Yeah.
thought of, well, just Satoshi, like I started with, he owns 1.1 million coins, so 1/21st of the entire network. That literally doesn't matter. Just owning a certain amount of coins does not matter. You could own 80% of the network of, or 80% of the coins in production, and it would not matter if you don't have node power, if you don't have mining power. So just by owning something,
Yeah.
just by starting something, it doesn't matter. And again, that's kind of the beauty of, okay, yeah, sure, it's the NSA or the CIA or whatever else, but
Yeah.
that's then. Even if it was, that's then. It's now a decentralized network. So even if they were the ones that created it, they no longer can control the code. Again, to your point, it's open source. Anybody can see, anybody can view the code. Not theoretically, anybody can edit it. There's kind of a process to do that. There's a process to actually making changes to Bitcoin. But if for some reason that process were co-opted somehow, then yeah, anybody can just take Bitcoin and fork it into something else and keep it going. So this whole idea that, okay, yeah, there's this government backing of it, great. It doesn't matter because of decentralization.
Yeah. Yeah. I heard someone talk about this recently, saying how, CIA, NSA, whatever government entity you want to say, there really is no incentive for them to even create Bitcoin in the first place, because Bitcoin effectively cuts off their funding mechanism if it's successful.
Mm-hmm.
So their funding mechanism is the Federal Reserve, the government being able, in tandem with the government being able to print new money. And so that new money can go to fund CIA, FBI, whatever, because we can spend as much money as we want. So we can you know, uh, fund these agencies and then use those agencies to impart our power on the rest of the world. Um, and that's what we do right
I
now.
would you can take that back the other way though. Like why is Edward Snowden popular, right? Like Edward Snowden was the NSA, right? He worked within that mechanism, right? And he basically came out and said, guys, this is awful. Like these are the things that are going on, and our government should not be doing this. And so I actually, you can say yes, like the people, in control, maybe they don't want it, but
Yeah.
that doesn't stop a group of a rogue individual or a rogue group within those organizations taking a look at basically that exact system and being like, yeah, this should not be,
Yeah.
a thing, right? And then creating Bitcoin to say like, all right, well, this is the only way we're getting out of this one. So here you go, guys. So
Yeah.
it's
But
even better. It's like they
it,
truly knew the extent of the problem and then created a solution to it.
yeah. But then even if it's a rogue agents, whatever, it's not the CIA, it's not the NSA, it's a subset of however many people who actually want to put one over on the NSA, CIA, government, et cetera. So it's really not something that like, oh, the government's using Bitcoin to. I don't even know who. I don't even know what people say because it's just stupid these days anymore. But um, yeah, so that I think that sums it up fairly well. Would you say that it really
I
doesn't
think
matter?
I think, well, I guess, yeah, that topic. I think it'd be good to talk about that mining one to end on. No reason not to. That's a big one now, I feel like.
Uh oh, so yeah, I mean, with wokeism, climate change is obviously a big thing that gets thrown around, and everyone wants to be good to the climate. And so people will say, liberals will say, more specifically, that Bitcoin mining is harmful for the environment, um, which I'll be completely honest. This is not a rabbit hole that I've necessarily gone down. I can say maybe some high level things, but at the same point, I'm sure you probably have gone a little bit further um, into how this Bitcoin mining can create a lot more efficiencies actually in our uh, energy systems in the world. Um, what I don't get, I'll let you speak to all of that stuff. It's truly fascinating and powerful. What I'll just say is what I don't get is why are electric cars good? We're like making this shift to electric everything, but Bitcoin's not gas powered in any way. Like I don't I don't know I don't even know how this came about, I guess, in the first place. Like carbon emissions, like what are we even talking about here? I don't know. Like maybe just will you speak to that? Because I don't even know. Like how did this even become something that was like, oh, this is an argument against Bitcoin? Because it really doesn't make any sense to me. It doesn't follow their
Well,
logic, I guess.
no, it does, because their logic is that we need to consume less energy. Whoever they is, right? That,
Mm-hmm.
like the climate change thing, that is actually what backs that. Is we need to consume less energy, need to produce less energy than what we do now, because that's the only way to solve the issue, right? Moving to renewables, sure, it solves it somewhat, but it still
I
doesn't fully solve it. And then the other half of it is it's just a complete misunderstanding. That's
yeah.
really what it gets to.
Okay.
Is people just don't understand how miners work, and what the reality of them is. And so that's why I say they don't understand
Okay.
how they work. So they see that they consume a lot of energy, and they say that that's bad, right? Consuming energy is bad because we should be consuming less energy, not more energy.
Okay. I'm with you, but I guess to me, like the fossil fuel form of energy is a more efficient form of energy than solar, than wind, than all of these other forms of energy creation that are in existence. I just don't. I don't know.
It's more,
It,
they're more efficient maybe, but they're still, like, you still have the negative effects that come with them. You still have, more carbon
oh,
being
so
put
they're
into the air because of that.
okay. So it's a less. We're using more energy by going to solar and all these others, but it doesn't put off the carbon emissions and whatever that
Hmm.
maybe gas does in a car. Is what they're saying.
Hmm. Yeah,
Okay.
right. And
Yeah.
so there's several misconceptions along this. The first one
Yeah.
is just the whole idea that we should be consuming less energy. Like, not to go too far in an aside, but that in and of itself, like, that is civilization death, is to say we should consume less energy. And not even that, but just standard of living death. Like, that's what you even see people, that's really what it's getting to, is we're going to have to lower our standard of living, because people finally realize that you look at like a Gini coefficient compared to energy use, and they're like a 1 for 1, right? The more energy a country or nation uses, the higher their Gini coefficient. Which Gini coefficient is basically just like standard of living. That's not, it's more real than what GDP is. It's not just based on consumption. Um, and so it's like, it's literally 1 for 1. The more energy you produce and consume, the better, the higher your standard of living. And so people are like, nope, we shouldn't have that. And it's just like, why? Like that's where it does get back to a first principle of just the, like, all right, are you a believer or not type thing? Because I don't get to say that, hey, you have to accept what I believe because I have faith in God, when you don't. Like, that's a difficult position to be in. So that in and of itself is just like, what, type thing. But even outside of that, so part of this, okay, yeah, Bitcoin mining is bad for the environment. The basic thought process is that, exactly what I said. Miners use energy, and that energy has to come from somewhere. And so most of the time, not most, but even if it's some of the time, that's, energy that could be used for other things at the very least, right? So even if we're going to produce it, we could use it for other things, right? So hey, even if it's a solar thing, right? Okay, well, why would you build a solar thing and build it for Bitcoin miners when we could instead use it to power homes, whatever else? That sort of mindset. And so that's kind of one of the base premises. That could go somewhere else. The misunderstanding in and of itself is just because there's more energy consumed by Bitcoin mining, that inherently means that more pollution is a byproduct of that, right? And the thought is not that they know that not every Bitcoin miner is gas powered or coal powered or whatever else, but by and large they believe that it's okay. Whatever percent is, that's still too much, basically. But what people don't realize, there's a couple of things that people don't realize. One is that, and there's actually many, I haven't kept up with them, but I know I've seen more and more studies come out and say that actually Bitcoin mining is a net positive from this kind of environmental standpoint. And there's a couple of reasons why that is. First and foremost is Bitcoin can actually use what's called, like in the natural gas setting, stranded gas. So, and that's one of the most potent forms of pollution, is this stranded gas, where natural gas miners, basically they can actually utilize all the gas that is coming out of their wells, and so they literally just pump it into the atmosphere. So what you instead do then is just basically plug a generator on top of that, and then use that generator to power the Bitcoin miners. So now instead of that, that natural gas just being pumped straight up into the air, it can run through a generator or another way, other mechanism that can use that. And okay, while it still might then have some sort of pollution byproduct, it's much less than what it was before. So now, and the reason, again, Bitcoin miners, these are machines that are basically cash flowing Bitcoin. So these miners, you turn them on, and then you're able to find Bitcoin. That Bitcoin is worth something. Even if you would immediately sell the cash, it's worth something. It does have some sort of dollar value. And so then, okay, now we've got a way to actually reduce pollution in some sort of sense there. Another way that Bitcoin miners are actually beneficial to part of this movement is that they actually can help incentivize more green type energy. And I consider green energy not just wind and solar, but nuclear as well. That's a whole nother thing why people don't like nuclear. I get the historical aspects of it, but that's a whole
Yeah.
nother like indoctrination thing, right? Like we see
Yeah.
the
Yeah.
Chernobyls, and it's just like, okay, yep, I get it. But at the same time, so it actually can incentivize these things, and the way it incentivizes them, specifically with wind and solar, first is that those are intermittent power sources, right? So what that means is that we don't always have the sun and we don't always have the wind. And we can, of course, we do have battery technology that we can store some of the power that those generate.
Yeah.
So it's not just while they're running, that power just does nothing. But even that battery technology is not very good. It can't really
Yeah.
store as much as we'd like it to. And while yes, of course, it's improving, it's still not very good. Um, and so what Bitcoin mining can then help with is it actually allows us to overbuild these sort of wind solar farms. And the reason that it allows us to do that, and to maybe even help like with this battery tech and everything else, is that okay, most of the time, and this is the other thing, I should say, the intermittent is one, the energy mismatch is the other. So wind and solar are mostly during the day when people aren't home. People go to work, they're not actually at their home. So those buildings are a little bit more energy efficient, work buildings are, than our home buildings. Our usage goes up in the evening and in the mornings while we're home, and is down less during the day when we're in these centralized buildings. And then you have the opposite, with wind and solar being most powerful during the middle of the day instead of those other times, because there's not as much sun, there's not as much wind, the batteries can't store it, whatever. So then what you can have is you can have Bitcoin miners come in. You can overbuild these facilities. So you can build more wind power and more solar power than what you need, because you know that there's this intermittency and you know that there's this energy mismatch. But what instead you're doing then is, when there is that intermittency to basically where there's power when there's no demand, or on the other side when there's a mismatch, the same thing, you just power the Bitcoin miners at that point. So you run these Bitcoin miners. Those miners, again, are producing an income stream, a way to make money. That money then allows you to go back and subsidize those projects even more so that, okay, you've got now 2 revenue sources off of 1 unit, right? It's not just when people are consuming power, it's when people are consuming power and when they're not, because the Bitcoin miners are in and of themselves. So that's another interesting way where it actually helps promote, those sort of technologies. With
Yeah.
nuclear, it's kind of the same thing too, where it's like and nuclear is kind of the opposite problem, I would say, but it's the same type of solution. It's intermittency, but it's just that with nuclear, basically the way it works is nuclear prefers to be steady. So, all right, it gets up to whatever it's going to, however much power it's going to produce, and it just wants to stay right there. It doesn't want to go up and down. That's actually difficult to do. And so basically then what you have is either then, if you're going to use nuclear as a power source, you build less than what you need, and then you use other sources of energy, which can be variable, namely oil, gas, coal-powered stuff, can be variable to uses. So you maybe have a nuclear base, but then coal and gas on top of it, because it really can't be go above it. And so you're not going to overbuild it and then just have energy that you're not using. So you're going to have those other sources. Of course, wind and solar can play in that too, but a lot of times it doesn't. So the way Bitcoin miners come into nuclear then is you can build at the peak capacity that you're ever going to need, right? So that peak capacity that you're ever going to need, you can build nuclear all the way up to that. And for the majority of the time when actual energy demand is below capacity, that's what powers Bitcoin miners. So again, you have these miners that are, again, generating a secondary income source, generating revenue when you don't have another revenue source because that power is not being used. So that actually allows us to then overbuild nuclear facilities, which nuclear, again, in my opinion, most of, you could say fusion and fission are kind of up the scale, but we haven't yet proved those to be scalable. So nuclear right now is the most efficient power source that we have. So now you can build these nuclear facilities, overbuild them to whatever the max capacity you ever think you might need, even including population growth into the future, and then subsidize the energy uses by plugging the Bitcoin miners in there. So again, a revenue source on top of it. So again, another way that it incentivizes nuclear over, again, most of the time the alternative there is to build these variable sources of, gas and coal-powered energy. And so, yeah, it's that mechanism is just fascinating because that actually opens up a whole host of other ways of like power generation, like even just if we're going to use like hydropower type stuff, it's the same thing there. I don't remember the details of this, so I'm not going to go into it too in depth, but I know there's a guy in Hawaii who has basically taken that same premise of what you have for nuclear power, put it on water, and said, okay, we can build a hydro-powered thing that's basically the same thing, that the water is consistently, like we can generate the same amount of power relatively all throughout the day because the water is moving the same way all throughout the day. But again, those demands are different. So it's hard to then build hydropower to, power everything that you need. But if instead we can, again, subsidize a flat energy production,
Yeah.
and a variable energy usage, if we can instead subsidize that with Bitcoin miners so that we have a revenue source, a way to make money, then okay, now we can also utilize another very efficient form of energy production, hydro, which is probably secondary to nuclear in its usefulness and its effectiveness. And okay, now you can even more get away from this other stuff. And that's where,
Yeah.
island nations, people near water, sometimes those are the poorest people. Because of this, they don't have the energy, but now they can because they can build these facilities. So uh, it's yeah, outside of all that, it definitely, I think you would know this. I encourage you to go down that rabbit hole because I actually think it's one of the most powerful things about Bitcoin is actually what basically unlocking the ability to, instead of be in this mindset of no, we don't want more energy, is no, let's get as much energy as we can. And now we have a way to utilize that energy if we immediately maybe can't do it. And then again, we talk about this kind of wheel of network effects as the network of the Bitcoin miners grows. That means that Bitcoin itself is going to grow as a network. And again, it's this just kind of beautiful symbiotic relationship between them. So, I haven't looked in that down that rabbit hole in a while yet, so I'm sure I butchered some of what I said. But by and
Yeah.
large, more energy usage good. Bitcoin incentivizes more energy usage, and that's a good thing.
Yeah. I would say it makes it more efficient, is really probably also another factor here from what you're saying.
Mm-hmm.
Instead of it being completely wasted, so like,
Yep.
okay, I build a large solar farm maybe in the middle of the desert, and because a lot of people don't live in the desert, but that's the best place to get solar, a lot of the energy goes wasted. Well, what we could do then is just utilize our sun in the middle of the desert to make money, and then we become this, and then transfer that economic power to another place where we can actually use that then to do whatever else. So essentially, you're
Mm-hmm.
transferring from an energy abundant place that maybe we don't need to be building a bunch of solar farms because people don't live out there, and we can use that energy out in the middle of nowhere Sahara Desert to then make it economically profitable to do so. I would say maybe so
Mm-hmm.
making it, yeah.
Yeah, I'd say so. The thing I think that's more interesting for me is I mean, I don't see wind and solar, at least solar on Earth, as a really viable solution for long term for meeting our energy demands. I'm also not convinced that isn't just a renewable resource in itself and that it's so bad in and of itself. I
Oh
think
yeah, I
there
don't think it
most
is.
definitely is some environmental effects of oil and coal and gas and all that. I'm not of the mind that like what we do on the earth doesn't affect it in any capacity. I just don't think it affects it as much as what maybe proponents of full on climate change and all that is. And so
Yeah.
it's like, yeah, it affects us. And like, yeah, if you're in a city, even from the standpoint of you got a bunch of coal powered cars or gas powered cars, like that particulate that gets into the lungs, that, I mean, there's a whole host of things that aren't good that come along with that. So it's not like, you know, uh, everything is wrong with what, the climate change movement says. It's just more that it's been taken, unfortunately, to an extreme where it's just like, yeah, this no longer makes rational sense. I guess maybe you could say I'm
Mm-hmm.
more like the old conservationist than I am, the modern day climate change person.
Mm-hmm.
But yeah, I think you're
Yeah.
exactly right in what you said that it does unlock that. I mean, I think a good example that people still even argue back and forth on this, but you hear about like the Texas Bitcoin grid, right? Well, Texas has got a ton of renewable wind energy, and so this is and Texas has, I think it's ERCOT or something. It's literally they have their own power grid versus, I think basically outside of Texas, it's like you've got three other major power grids. I forget how it kind of works, but Texas kind of
Mm.
keeps to itself. I don't fully understand it. But anyways, um, so what they did was actually the wind method of what I just talked about. They built a whole bunch of wind energy and hooked Bitcoin miners up to that. So increase the profitability of building wind energy. So incentivizes building more wind energy and gets your return on investment quicker, which is, in this sense, a good thing. And then also that whole kind of same mismatch of demand or usage and production of energy, it just fits right in there. And so that's where you'll see, like you might have heard, I don't know, that year or so ago, like they had the heat wave summer, and you hear about all the Bitcoin miners in Texas that were shutting down, and yeah, they were, because that was exactly the way they wanted the
Mm-hmm.
system to operate. Bitcoin miners run while the power is not being used, and then when it's needed, they all turn off, and that actually helped them out to get through some of those heat waves better than what they otherwise would have. I would never personally mine in Texas for that reason. Like that just makes my miners less productive, right? When they've got to be shut down in that sort of sense, especially for
Mm.
longer periods of time. But like the energy companies themselves, when it's there already, and like they have to build the infrastructure out, it's a no
Yeah.
freaking brainer to have that.
Yeah, and it's just like it's a straight cost essentially for a state-run government or something
Mhm.
like that. It's not a profitable venture for any of them, and so for a state to be able to build out energy infrastructure and then it also be possibly profitable, but at least somewhat subsidized, it can actually help the I would say economy maybe run better because
Mhm.
then it's not just straight costs to the government.
Mhm.
Maybe I'm wrong in that, but that's what I'm just thinking from what I'm hearing from what we're saying.
Yeah. Yeah. No, you're right.
I would say it makes it more abundant area. If my city is has a lot of energy production and we can subsidize that and profit off of that, then all of a sudden we become more wealthy in that specific area. Um,
Mhm. Yep.
so
Now you get into the game theory of Bitcoin as a whole, right? Because the game
well,
theory is now not just the price of Bitcoin and those incentives. The game theory is the incentive structure behind the mining aspects of it as well. That's part of
yeah.
it. The other part is, all right, you've got mining infrastructure. Now you can secure basically your spot on the blockchain, so that if you need to get transactions through, you can do that. And so now it's this race of making sure you have enough hash power online for your country or your state to make sure that that can happen. And then that's a battle again. more hash power, more better for Bitcoin, higher price for Bitcoin. And again, like higher price of Bitcoin means that more people are willing to put miners on. Again, this virtuous cycle of the game theoretics of Bitcoin in and of itself. Like mining
Mm-hmm.
plays a huge part of it. And now that we can see kind of some of these uh, uh, potential paths in the future with what I just talked about, you know it's one of the more bullish things about the long term of Bitcoin that gets outside of just like, well, you got to have institutional demand coming in and whatever else. Like, no, like
Yeah.
you just want to effectively use energy, and Bitcoin's a way to do that. That's compelling.
Yeah. Yeah. It's interesting. It's interesting for sure. But that's how networks grow. Like you're saying, they compound on themselves basically. And so the more valuable it becomes, the more likely it is to become more valuable essentially. And so that's why the belief of Bitcoin never going to zero is now, pretty strong in at least the Bitcoin community because of the network effects that it has reached. It's almost like it either will continue to go, it'll continue to just take over everything, or I don't know, quantum computing maybe or something is what I've heard recently. It destroys it and then we go to zero.
Yeah,
Anyways,
supposedly. Another
yeah,
rabbit hole for another day.
yeah. I all I know is that the few people that I talked to at the Bitcoin meetup the other day, um, though they are much much smarter in computing than me, and if they love Bitcoin, I love Bitcoin. I'm not worried about any quantum computers if they're not, like anything
Yeah.
related to the tech side of it. If they're not worried, I'm not worried. I'm telling you, I can't even have a conversation with those guys. I don't even know what to say to them. Like, what are you even talking about, man? So um, yeah. Anyways, I think that was good. Good stopping place. I think it would also be these are kind of anti Bitcoin arguments that come up of people, why Bitcoin sucks, essentially. But there are still some real risks, and you mentioned the 51% attack as a real risk to Bitcoin. The likelihood of it happening is now just becoming more and more out of reach, of course, which we can specifically talk to in later episodes. But there is legitimate risks still to Bitcoin that we even acknowledge. Even though these may be quote unquote risks that other people may talk to are really just myths that we can debunk, there are actual legitimate risks that we can address maybe in the next one that I think would be
Yeah.
enjoyable to do. So All right, that's all for this one. If you're the one of the Jim, Bob, or Tom, the three that listened through all the way, thank you. Appreciate it. This really is probably just going to be something that is rarely listened to, but more so enjoyable for us to do. Helps us clarify our thought processes, and then the few people that do listen, hope you benefit from it. Adds value to you, and then you reach out to
Now
work with
we need to manifest it. We got thousands of people that are listening right now,
thousands.
maybe hundreds of thousands, just
It,
everywhere, all across the
it,
world. They're all
yeah,
listening to this. Just
that's
grab
right.
on here.
That's right. That's right. And it's 2037 and they're listening to it right now. So it's
The
oh
amount
man.
world like 40 billion, so 100,000. That's not even that many people anymore.
I know. I know. So this was good. Yeah, if you wanna if you're interested in working with us, we are financial planners for Bitcoiners, and probably didn't sound like it in this conversation because we sound like more so we're just I don't know. We got kind of technical, I would say, a little bit in this one. Maybe we're developers on Bitcoin in this conversation. Less financial.
I
uh,
think we're more philosophical than computer nerd.
yeah, that's true. So yeah, maybe next time we'll talk about this legitimate risks or start getting into some financial planning topics because that's really our bread and butter at the end of the day, and I think where we can add the most value to the Bitcoin community in general. Um,
Yep.
because there's podcasts that talk about this stuff already, and we're kind of just repeating the same stuff we've either heard ideas that we've come up with from what we've heard and learned from other people. But I think the financial planning stuff is something that we can actually bring to the community that's not really fully out there yet. I mentioned today on the podcast I recorded with what's his face, Rajat, um,
Hmm.
how you were thinking through the get on zero with the dollar being the unit of account still, like how you would think through the financial planning principles of emergency funds, sinking funds. He said, I'd never say that, but I know what it is, but I just never refer to it that way. Um, like how you think through those principled financial planning topics, even though you're taking a get on zero approach where you don't have any dollars, all Bitcoin. So, that was interesting. And I think we can dive deeper on these conversations into that stuff. And that's where we can be maybe the leaders, honestly, of the Bitcoin industry and in our financial planning world. Um, yeah. Anyways,
Yeah.
we'll go ahead and wrap it up here and see you in the next one.